we are very much aligned with shareholders. The bulk of the rest of the shareholder base is retail. We don't really have any big institutions at this time. A lot of them did exit because of the uncertainty of Argentina. So that's creating an opportunity for us to bring the story back to the market with a completely different feel from what it was 18 months ago. So, management sees that potential. We see that opportunity over the next 3 to 5 years to transform into something significant. We're a little bit agnostic on the commodities. We're here about making money and making value for shareholders.
Well, Cliff, it is rock solid of you to join us today here on Mine Stock Talk. And before we drill into the details, I would love it if you could touch base a little bit on the Cerrado Gold story. And also we might touch on the latest exciting news before we get into the exciting properties that you have on the go.
Perfect. Well, first, thanks for the time today, and happy to elaborate on the Cerrado Gold story because it has gone through a number of changes over the past 2 years. And really in 2025, it's a reemergence of a new Cerrado. Because if you go back 18 months ago, we had 2 assets, primarily in Argentina, which is our production-based gold asset, and an asset in Brazil. But due to various policy changes in Argentina, it put significant strain on our balance sheet, necessitating us to sell our asset in Brazil, which was the Monte do Carmo asset, to Hochschild for $60 million US. Those funds came in primarily over the course of 2024, which has really positioned Cerrado now moving forward to become a strong gold producer, producing that 55 to 60,000 ounce range, but also a very strong balance sheet footing to continue to grow our other assets within our portfolio without a need to necessarily come back to the market, as you see many junior companies have to do on an annual basis. We believe the story now is a very strong platform for significant growth over the next, call it, 3 to 5 years.
Wow, very exciting. Can you also just point out the Ascendant Resources acquisition and how that fits into the whole company's picture?
Sure. Ascendant Resources owns the Lagoa Salgada Project in Portugal. It's a VMS project, so polymetallic. It was a company that has already completed a feasibility study, already has significant resources in place, roughly 28 million tons. That the management team knew very well. There was a lot of overlapping management and directors, but in the junior market space in 2023 and 2024, they were just not in a position to progress that asset to a full construction decision. With the strong balance sheet within Cerrado, we saw an opportunity to take a well-advanced asset, relatively de-risked, and for a very modest amount of additional capital, get to a full construction decision around the end of this year, early in 26. So we're progressing that now as we move forward. But again, it was just an opportunistic acquisition. And unlike many junior companies, the lack of access to capital really stalled out that story. So it was more opportunistic. And now we see that between Argentina being our current production and cash generating asset, we lever the cash flows from Argentina to build Portugal. And longer term, we can use those 2 assets to fund the bulk, if not all, depending on metal prices, of any equity needs for our Mont Sorcier project in Quebec.
That probably helps explain too why the stock has done fairly well over the last, say, 14 or 16 months. We're pretty happy to watch the progress.
Yeah, as I said, during 2024, people wanted to get that full strength of the balance sheet back. It actually, from an operational standpoint, the mine performed very well. Obviously, there's a lot of changes going on in Argentina that just kept investors away. In the early part of 25, we've seen a lot of very positive comments come out of the government in Argentina. The removal of the bulk, not all, the bulk of exchange controls, making it a lot easier to repatriate profits from the mine without having to go through significant friction costs. Because you could get the money out in the past, but you lost a fair amount on the friction. So now we're in a more, I guess, normalized operating environment in Argentina, which makes it a lot more attractive. You're seeing many global mining companies, Lundin, Glencore, Rio Tinto, McEwen Mining, all lining up to build multi-billion-dollar projects in Argentina, as now Argentina is becoming a much more attractive investment for mining.
Well, it sounds like a polymetallic playground, if you ask me.
Well, that, to some people, that is a different combination between gold, base metals, and some bulk materials. Our aim here is to generate a strong cash flowing company. We see, based on the 43-101 reports for these 3 assets, so not my numbers per se or my projections, we see a story that by 2030, 2031, we could be generating 500 million US of EBITDA if we deliver on all three projects. So that is the driving force here for the management team, is to deliver on that goal, on the best, the best metrics for shareholders. So we'll continue to move these projects forward to daylight that value, because we believe at current valuations, especially relative to our peers, you're getting a lot of these assets for a significant discount, if not for free.
And so swinging it over to the Lagoa Salgada project, am I saying that correctly? How does that fit into the picture? Because there's been significant discoveries recently.
Well, for Lagoa Salgada, in the short term, obviously we have 55,000 to 60,000 ounces coming from Argentina. The initial years of Lagoa Salgada will also be precious metals rich. So the story will continue to be somewhere between 60 and 80% precious metals, depending on what price deck you want to use. At spot prices, closer to 80% of our revenue stream would still be coming from precious metals. And then we'd have copper, zinc, lead, and a little bit of tin. And that is very attractive to the EU and from a critical minerals point of view. But it also, Lagoa Salgada, in our view, is still at its infancy in terms of discovery. When you look at the 𝐿GO mine or the 𝐒𝐿GO mine, which are also located on the Iberian Pyrite Belt, both of which traded hands in excess of 1.5 billion over the last 18 months. Those have been around for 20 plus years. These projects continue to grow at depth through further exploration. We're only down between 200 to 300 meters currently for our north and south zone deposits. You look at 𝐒𝐿GO, they're down 1,500 meters. So we see plenty of room for continued growth of the resource base there. Ascendant, as a standalone company, again, just didn't have the wherewithal to continue to explore. So we haven't really looked deeper. A lot of the geophysics and other work suggests significant room to grow. We just have to have a chance to drill it off.
Can you just point out how you plan to fund the Portugal project and how that ties into your existing operations in Argentina?
We have been in long discussions with the UK Export Credit Agency and Santander Bank, as has been outlined to the market, to backstop 70% of the upfront capital on a non-recourse financing basis. The remaining 30%, we would probably look, depending on market conditions, at adding additional streams. Sprott has already indicated a desire to expand the stream at Lagoa. We're looking at potential off-takers where they prepay for an amount. So we expect any additional funding, that may be required from an equity standpoint, to actually be generated from cash out of Argentina. So for the outside market, we expect de minimis amounts of new equity would be required, especially if gold stays up here at 3,300
or goes higher.
That's great for everyone. It just means it definitely means we don't need equity at that point.
You mentioned the fact of the possibility of a streaming deal with Sprott. What are the shareholders sort of like in the existing company now?
Well, management and directors still retain about a little under 25% of the combined company. So we are very much aligned with shareholders. The bulk of the rest of the shareholder base is retail. We don't really have any big institutions at this time. A lot of them did exit because of the uncertainty of Argentina. So that's creating an opportunity for us to bring the story back to the market with a completely different feel from what it was 18 months ago. So, management sees that potential. We see that opportunity over the next 3 to 5 years to transform into something significant. We're a little bit agnostic on the commodities. We're here about making money and making value for shareholders.
Well, that's a good thing, because as retail shareholders, we appreciate that. And I think that's interesting that your shareholder base is like that, giving you some good exposure in the retail world, which I think going forward, retail is going to really matter.
I agree. And we've seen over the last couple of months, obviously gold price is helping us and a lot of other juniors, but the volume is picking up. We're doing a lot of communications now to spread the story, and people are starting to understand, yes, there's a lot of things we have to deliver on over the next couple of years, but if we get 2/3 of that, even the valuation is somewhat offside.
One of the things that you mentioned a little bit earlier on in the conversation was tin. And so that brings the next question that we have is, in terms of portfolio diversification and critical minerals growth, is there anything beyond gold that you're specifically looking forward to move into a little bit later down the road, or that you kind of just got your eye on a little bit right now?
We're always looking. Obviously, in this market, the asset values for gold-based assets are, in our view, dollar signs in a lot of people's eyes. So it's very difficult to get quality assets at a reasonable price. So we'll play the waiting game a little bit on that basis, but we continue to look at a lot of things. We think the outlook for gold and silver is still very robust. The outlook for copper and critical minerals because nobody's building anything, continue to be very robust for the next couple of years. And as I said, we haven't discussed it at this point, but longer term, we see the Mont Sorcier asset as a transformational asset, given the size and scale potential that it has.
And actually, can you just outline for us where it is and the jurisdiction? I think it's important for us retail to understand.
The Mont Sorcier asset is a high-grade iron ore asset located outside of Chibougamau in northern Quebec, so a historical mining district, lots of history of mines in the area. But what's unique about Mont Sorcier, it's not just going to be another iron ore mine spitting out 60% grade iron ore concentrate. It will produce clean 67% grade iron ore concentrate with very low alumina and silica, which is the key demand ingredient for the iron ore business going forward to create low emission steel. So if you want to be part of the green steel transition, you have to have this quality of iron ore, which is feeding into the industry. The iron ore business is, global in nature. It's 2 billion tons per year. It grows 1% a year. But the subset of high-grade iron ore, like 67%, is growing at around 10%. And that's the market we're filling in. And I think that continues to be very attractive. It gets a significant premium value from the steel business relative to 62 and even 65% iron ore concentrate. So we see this, yes, it's a large-scale operation, but from a mining perspective, it's very simple. The key logistics of 370 kilometers of railway and a port at the port of Saguenay in Quebec, they're already there. They're underutilized, and there's a lot of support to bring these projects forward. As given the nature of the iron ore there, it is deemed a critical mineral in Quebec and in Canada.
No question about that. And obviously the politics of today is pretty favorable to that kind of a project.
We're hearing a lot of comments, and obviously in Canada, we're hearing it in Europe and elsewhere about streamlining the process to shorten the permitting cycle, not to make it less rigid, but just shorten the cycle. Right now it could take 2 to 3 years sometimes, depending on the project and the location. But we're seeing and hearing all the right commentaries that as long as you deliver the appropriate documentation and enough data, hopefully that'll be streamlined and accelerate the process on these projects, because it is a key stumbling block to bring these projects over the goal line. What we've outlined at Mont Sorcier is a 21-year mine life in the PEA, producing 350 million of EBITDA and roughly 235 million of free cash flow over 21 years. That's only using 25% of the current known resource. This is not a early stage exploration play. We have over 1.2 billion tons of resources in place, and over 50% of that is in the indicated category. So we don't need to explore for any more at this point.
It sounds like a really interesting project. We'd like to get up and see it at some point, and it's highly accessible, is it not?
It's right off a logging road. It's very accessible, and it literally is sticking out of the ground. It's a very easy iron formation, and that's why it's called Mont Sorcier. It is the only thing that's still standing. So that's what I'm saying. From a mining point of view, it's very simple. It's less than 1-to-1 strip ratio, so we'll be right in ore from day one. So it's a very attractive project. It's larger than, so it takes a little bit more time, and we expect to deliver that feasibility study in Q1 of 26. And I think that is where, for us, we see the opportunity for a revaluation of that asset within Cerrado Gold, because that will clearly put more rigid numbers on it than the PEA. It'll be current, CapEx will be current, OpEx will be current, and it really will just be a much more robust opportunity. And at that point in time, we'll see what the market bears. Do we trade at 0.1, 0.2 times NPV? On the PEA, it had an NPV of 1.6 billion US. If it comes in anywhere around that number, that's worth 150 to 300 million to implied market value. But it also opens up the opportunity of, do we continue going it alone? Do we bring in a partner? Do we sell it? We'll see what's best for shareholders at that time. But right now, we think shareholders are getting it for free.
So that means, if I got that right, that the cash flow will be used to advance the other projects. Financing might come down the road, depending.
Yeah, it really will be dependent on, obviously, if metal prices stay robust, the need for equity will be reduced. And we have strong financial support for both Portugal and Quebec, even though Quebec is at an earlier stage. But given all the various environmental benefits that are provided to the steel business, we're seeing the UK Export Credit Agency and TD Bank here in Canada already signed up as a mandate for leading non-recourse project financing on that project already. We're looking to minimize, not saying never, but minimize equity dilution as required, because obviously that's beneficial to management as well.
Now, Cliff, for investors that are considering Cerrado Gold, obviously there's a compelling combination of immediate returns and strategic future potential. But what would you say are your top one or two reasons that investors should be confident in Cerrado's ability to execute these future plans?
I think a couple of things. First, you look at the team and what they've delivered in the past. The team turned around the Jacobina mine in Brazil when they acquired it for cheap, turned it around, sold it to Yamana within 4 years for $600 million after getting acquired for a couple of $1 million. They also developed Largo Resources from the early 10 million exploration phase through construction, through development, through operation. Before exiting, it did reach a high of a 2.5 billion market cap. We worked at Sierra Metals, where we repositioned 3 operating mines and saw a significant improvement in the market valuation as well before we created Ascendant and Cerrado Gold, which was private at the time. So again, when you look at the team going to the depth of the actual development and operating team as not just the corporate promoters, we have the team and that have done it before, which is, I think, going to be key to us continuing to deliver. In the short term, if you want to say what should investors be looking for, I would say just steady improvement quarter over quarter in terms of production coming out of Argentina. That will be more back-end loaded as we're going underground to supplement production. The heap leach facility ramps up to full capacity in Q2, moving Lagoa forward to the next phases, getting towards that construction-ready decision by year end, and just steadily moving the Mont Sorcier project forward. It's not going to be very newsy at this point in time. It's a lot of technical work, but again, just every quarter moving those projects down that pipeline so that reality of going to transition from a 1 mine company to a 2 mine company to eventually a 3 mine company continues to be the driving force there. At the same time, we'll continue to look at any opportunistic things that come our way.
Well, that sounds like an exciting year ahead. Well, I just want to touch for a second, though, on community. You're in 3 different jurisdictions. They're all very different from at least our perspective. So how do you get along with the various communities in them?
Well, in Argentina, the project is actually very remote. It's in the southern part of Argentina and Santa Cruz province in the Patagonia region. I think our nearest population center is probably the better part of 100 kilometers away. And we do have good relations, but we don't have to worry about being next door. So that's something that's been there. And we're in the main mining district of the Deseado Massif. So we've got Cerro Vanguardia, Cerro Moro, Cerro Negro. So there is a well-established mining community there. In Portugal, we're on the Iberian Pyrite Belt. So this is the mining district of Portugal. The other mines have been around for quite some time. We're located in the town of Grândola. We're about 10 kilometers outside of town. You won't see the mine. It'll be underground. It's off the main highway. So they're very supportive. What they want to see is good, high-paying jobs. We're only about an hour south of Lisbon, and their community has been decreasing as people migrate to Lisbon. So they want to keep the younger people, give them good jobs and good work. And in Quebec, again, it's a mining district. A lot of history there of mining. We deal both with the local community in Chibougamau and the 𝐂𝐿GO Indigenous Cree Nation as well. Both to date have been supportive and will continue to be highly communicated with the various groups as we move forward.
Well, that's good to hear because as investors, especially being retail, we like to hear that the community effort is there and that it works out. So that was a good review of that.
We recognize that in the mining business, if you do not have good community relations, you do not have a project. So for us as a group, that is core in our way we do business.
Well, that's 100% correct for us. I mean, that's something that we always keep a close eye on. It's obviously the way of the future, and it's just how it has to be.
And it passes a good message on to new investors, young investors, and that can see an exciting project and know that it's got people representing the community well too. So you guys are doing a great job on that. The 3 projects look amazing, and I love the way you're financing it, in that you're using internal cash plus possibility of a market move at the right time, as you say, conditions being good. So fantastic work, and we're excited to be shareholders and will continue to be.
Calling all savvy investors in mining and resources? Seeking the inside track on Cerrado Gold? Look no further than minestalkers.com for cutting-edge knowledge and real-time stock updates. Visit for the insights and stay for the gains. Seize the opportunity and explore the magic at minestalkers.com. Uncover new investment possibilities today. Don't forget to hit the bell below to subscribe and then like and share this video. Let's get the word out there.